bill is going to impact you is Craig Bolanos. He's the founder and CEO at Wealth Management Group in Inverness. Thanks for coming in.
Yeah, great to be back.
Boy, there is a lot to go over when it comes to this, but you say there is some basic things that people need to know.
Well, there is. I mean, outside of the confusion, the controversy, the hyperbole statements, I think with our talking points, we'll break it down to people. So what we do know is at the end of the day, you are going to have 85 to 90% of America have a simpler tax filing because more people are taking a standard deduction because it's doubled to $24,000. And on top of that, so many of the things that were tossed around on Facebook that were going away.
Right.
Tuition and fee deductions, the teacher credit, medical expenses, all of that stuff is back in.
Bottom line, we heard Speaker Ryan yesterday talk about the average family saving about $2,000. You've got it right at around $1,600. So that's a pretty safe number because I think a lot of sources back you up.
Yes.
You know, we were talking right here on the screen here. We're talking about the AMT. That was thought that might go away under the Senate version, but then the House put that back in. And could we see that stay?
Well, I tell you what. Here's what they did. You know, the AMT was designed back in the day to make sure the wealthiest Americans paid their fair share. And what they did is they put a fix in, so no one is paying the alternative minimum tax anymore unless you make more than $1 million. So that's what I call directionally correct for America.
All right, you've got some scenarios. Let's start with John and Mary. They've got 2 kids that are making $75K. They don't itemize. I think that's important to note. So they're excited because the standard deduction is going up, right?
Absolutely. So you take that normal American family, right? 2 parents, 2 kids, don't itemize, $75,000 a year. They're excited about the doubling of the standard deduction. They're equally excited about the expansion of the child tax credit.
Doubled, right?
Doubled to $2,000. So at the end of the day, that American family, based on our math, is going to save $1,600 to $1,700. But let's compare and contrast that to another family.
Yeah, a family that makes more money and has more property. So talk to us about that.
Someone in the burbs.
Yeah, so you've got that same family. They've got 2 to 3 children. Both mom and dad have high income. They live in the burbs, and they have a big mortgage because they had a low down payment, and because they live in the burbs, big what? Property taxes.
Right.
And they are fearful this morning because they read that state and local tax deduction is capped at $10,000. But to alleviate their fears, they also now will benefit from something they've never had, because not only did that child tax credit double to $2,000, the income range expanded. So people making up to $400,000 a year now get the credit when it used to only apply to those making $110,000 or less.
One of the big debates was those so-called pass-through businesses. Now, I know that it changes for them as well. How so?
Well, I think, you know, when you have a pass-through business, there's going to be a couple dividing lines in the sand. The first is if your family is making $315,000 or less, you just won, because you've got this 20% deduction. Think about it as 20% of your income now is going to be extremely favorable. But don't worry, if you make more than $315,000, the big showdown is going to be anytime you take a corporate rate and it undercuts the individual rate by this much, 21 for corporations, 37 for individuals. We're going to have a lot of very successful pass-through businesses scrambling to re-entity themselves as C corporations going forward.
Oh, that's interesting. So that may be a way kind of to work with this a little better.
You know what? I think the pace of change always supersedes legislation.
We're almost out of time, but I want to ask you, a lot of charities nervous because, and I read this in a study this morning, that 83% of people who itemize give to charities. Those who don't itemize, only 44% give to charities. So a lot of people are nervous that people are not going to be giving as much come 2018.
I would agree with that wholeheartedly, that the more people become aware about how Schedule A no longer works for them because they take the standard deduction, you might see some of the charitable intentions go away at the margins. I just hope that most of America remembers, especially at this time of year, why we give to charity and continues to follow through.
And lastly, I know we have to go, but what about alimony? Because we had discussed with another expert about the concerns for people that they will not be able to deduct alimony anymore.
So going forward in 2018, those that are getting divorced, it's going to be a tougher way to divide the finances, because yes, that's a part of the change.
But you may be grandfathered in. Did the grandfather clause work for them?
You know what? So that I've got to double check once this 479-page document hits my desk on Friday.
Just 479 pages?
479
it's light
pages.
Reading, Craig Bolanos.
Yes.
Thanks
we'll get through it together, though.
Appreciate you coming in as always.